Hello traders, Gary Wagner here, approximately 11 a.m. on Monday, the 11th day of June, 2012, 5 o'clock in New York City, and this is the daily report for gold and silver. Traders, any kind of optimism quickly faded this weekend when there was an announcement that they have a potential bailout and solution for the banking problem over in Spain. The key with the gold market right now is its testing of 1600 and most importantly, its inability really to make it above that point. We are looking right now at a daily chart. It is in Henkinashi format, and you can see the attempts in terms of a daily basis in this market in which we have really attempted on multiple occasions last week to break through that area, but as you can see, it really did not have the ability to do that. We've also identified really what we're calling a triple bottom right down here at 1520. So what does that mean? My sentiment right now is that without any real significant new fundamental data in the marketplace, this market could easily be range bound. And when I say range bound, I'm looking for it to trade within a defined area, meaning the low right around 1520 and then the high right around 1615 to 1630. And as you can see, it has been trading in this defined range, hitting that, testing it on two other occasions, coming back up and finding resistance, as I said, roughly at around 1615. However, traders, right now it has the inability to, on a closing basis that is, make it above $1,600 per ounce. Traders, we are looking at a short-term 240-minute candlestick chart. This is of August gold, and it does have our MACD, or moving average convergence divergence. And the reason for pointing that out this morning is that you can see that as we sold off, you can see these lines are coming in and it's getting to a point where it's almost crossing but has not crossed. At the same time, when we look at this sell-off that came into the market here, drove us down to the intraday lows just above 1550 and started moving back up. We went into our green candles, which signaled a buy signal, a little consolidation, that's that red candle here, and now on the short-term charts, it's back to a green candle. My belief is that if we get a continuation, we're going to probably go back up to test these highs right around 1650. Of course, it's got to get over 1600 first, and we'll also see the moving average convergence divergence cross. You know, traders, we talked about gold having the difficult time getting over 1600. Silver is having actually a more difficult time, and you can really see this on a technical basis when we go ahead and pull up this chart. It's cash silver 420-minute chart, and here's what you can see, and you can see it quite easily. When we take a look, this is at 76% retracement. We've talked about this area before, 2870, call it. There can be absolutely no doubt, but you can see these attempts as the market came up and tested these areas. On the first three occasions, it was unable to do that. Once we got to that point, the market would sell back down. But the one thing that we talked about all through last week is the difference right in this area here compared with recent history is that when we looked at it historically, we could characterize the silver market as having a series of lower highs as the market went down, and of course, lower lows as the market went down. That's really the mathematical expression of a downtrend. Can be no doubt about it. Once it hit this low right at around 2660, we had a lower low, but the next low, as you can see, was a higher low. And this is a higher low, and once again, a higher low. So we've had a series of higher lows, but we haven't had them with higher highs. You can see we have this real congestion band. After the third attempt, it did come up, but if you look at this market, this is that 61% retracement that we talked about at about $30 per ounce. And you can see we stalled just before getting to that area. Then the marketplace trades back down. Silver trades back down below this area. So we still have this area as resistance, and as you can see quite easily, we're still sitting below that point, 28.52. On a closing basis, we need to see it go above 28.70, call it, before we feel there's some significant opportunity to the upside. In the meantime, my sentiment is, just as in gold, we'll see it trade in a range-bound manner, the lows 26.60 and resistance at approximately $29 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.